everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals driving the markets currently. So Peter, I understand that the USD dollar weakened yesterday, right?
Yeah, actually the US dollar was losing ground across the board yesterday against its counterparts. I would say that there is a combination of factors which tended to cause the weakening of the US dollar. We had market expectations about the Fed's hawkishness to ease, which were more enhanced yesterday, and that was the one factor that weakened the US dollar, maybe even the main one. But I would also note that we had a number of financial releases which were not so good. Say, for example, we had the US consumer confidence for September. It dropped beyond market expectations, and that tended to imply that overall the morale in the demand side of the US economy is quite low, and that may more or less prevent consumers from actually having more retail sales or more purchases. At the same time, I would also note that we had the Richmond Fed Composite Index, which dropped into the negatives, implying that there was a contraction of economic activity in the wider Richmond area. So overall, the possibility of a recession in the US economy tends to become nearer, yet I think that would be more clear on Thursday tomorrow when we get the preliminary GDP rate of the US economy for Q3.
And was gold on the rise?
Actually, gold yesterday rose, edged a little bit high. It practically stopped the drop it had the day before on Monday. It was on the rise today during the Asian and European session mostly. I would note that the negative correlation of the precious metals price with the US dollar, and given that the US dollar was dropping, provided the chance for gold to rise. At the same time, we had also a drop of US yields. It was characteristic that at some point the 10-year US yield reached 4.09%, which was, if I'm correct, a 3-week low. And I would also be noting that tended to polish the shiny metal, given that gold and US yields have a competitive relationship.
And how about the US stock markets?
US stock markets were on the rise. We had Nasdaq, Dow Jones, and S&P 500 being in the greens. There seems to be an issue, and the market's attention seems to be focused on tech companies, big cap tech companies. It was characteristic that Alphabet's earnings report tended to disappoint traders. Say, for example, we saw that both the EPS as well as the revenue figure for Q3 missed its target. It was below market expectations, and that tended to increase market worth somewhat. And I would dare to note that we still see attention being shifted now towards Meta's earnings report for Q3 today. And it's not only the earnings, the EPS figure, and the revenue figure which matters in this case. Also, I think investors are going to be looking whether there have been increased cash outflows for the Meta project as such. And it's a little bit frustrating for investors. It's no wonder, say, for example, to see the shares price dropping if you continuously see cash outflows and at the same time no revenue coming in from the project. So that's a big issue for Meta's share price. I would note though that we have also a number of other releases, and I would be noting among them eBay. We also have Boeing and Ford as well. And in general, I would dare to note that the positive market sentiment was enhanced yesterday, and that allowed in general, US stock markets to rise.
And how about the common currency?
Well, the euro strengthened against the US dollar, the pound, the yen, and CHF on Monday. Yesterday, the rise was continued, maybe with the exception of the pound, which gained more, while the rise against JPY and CHF was not as wide as it was on Monday. Overall, I would dare to note that in the positives for the euro, we have ECB's interest rate decision tomorrow, and the bank is expected to proceed with another jumbo rate hike. On the flip side, we still have the war in Ukraine, and escalation could weaken the euro somewhat. So the euro is at the time trying to navigate between ECB's intentions, the war in Ukraine, and the energy crisis in Europe as such.
And what's on the calendar for today?
We don't have a high number of releases. We would note, though, from the US, the new home sales figure. It's expected to drop. And if actually so, we may see the USD weakening somewhat. I would be also noting for oil traders, the EIA crude oil inventories figure. It's on a weekly basis. It's expected to show reversal of prior week's drawdown, and inventories are expected to rise slightly. It should be noted at this point that yesterday we had the AP weekly crude oil inventories figure, which showed that US oil inventories rose substantially, and that passed practically under the radar. But it indicated that practically the US oil market seems to have a considerable slack, as practically demand was not able to catch up with production levels. The main event for the day, though, is expected to be BOC's interest rate decision. Now, the bank is expected to hike rates by 75 basis points. It's characteristic that CAD OIS imply probability of around 77% for such a scenario to materialize. The rest tend to imply that a 50 basis points rate hike is also possible. Now, should you have asked me a week ago, on Friday even, the market was split. Whether that's going to be a 75 basis points rate hike or a 50 basis points rate hike. Now, given that we had an acceleration of the core CPI rate on a year-on-year level for September, we had some employment data which tend to imply that the employment market in Canada was pretty tight for the same month. And we had also an acceleration of the retail sales growth rate for September. Overall, that tends to imply that the markets expects the bank to proceed with another 75 basis points rate hike. On the other hand, the bank may want to start slowing down its rate hiking path. And should it signal it in its accompanying statements or even in Governor McClellan's press conference later on, that could weaken the CAD. So overall, I would expect the bank to continue hiking by 75 basis points in today's meeting. I would expect it to maintain also a rather hawkish, confident tone in the press conference as well as in the accompanying statement. Anything less than that could weaken the CAD. I would note that CAD traders are expected to be focused, and the event could be altering the CAD's direction to either one side.
Any final comments?
Well, it's going to be interesting to see whether the markets are going to maintain that positive market sentiment. And practically the question is, stock markets right now are navigating between the Fed's intentions, earnings reports, and at the same time, geopolitical risks, which could more or less jeopardize the positive market sentiment. Should that be maintained, I would expect the market to continue to support risky assets, such as, say, for example, stocks, definitely, and commodity currencies, which are also considered riskier in comparison to other currencies.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome everybody, this is the technical analysis part of the presentation. My name is Peter Yosef, senior analyst at the market analyst at IronFX. Now in front of your screen you have the US dollar index, it's the 4-hour chart. Please note that all charts which are to be presented are to be of the same time frame unless otherwise stated. Now we see that the US dollar index dropped substantially. Actually tumbled yesterday and is on the retreat once again during today's European session, despite some stabilization during today's Asian session. Now, before we start, let's make the necessary corrections. I would be correcting this level at 111.60. So the first support line has been lowered a little bit and actually now has been turned into resistance line as the price action is below it. Second support line could also be corrected a little bit lower. Actually, it would be at 110.70, sorry. Reflect this true here and this true here. In red though, given that the price action is still below it. I would be noting also though that the final resistance line at 110 seems about to be holding ground, so I'm keeping it. Let's move to new support lines. Definitely we have one here. And that would be the 109 in green. And the next one could be as wide as low as this one. There could be some mid levels in between, however, I think we're going straight for a downward motion here. 107.40, 160 ticks different. In green, please. Let's widen this. $109 being set as the second support line, with 110 being set as the first primary support line, which is being tested right now as we're speaking. 110.70, which provided some support practically during today's Asian session here. has now been turned into a resistance line given that the price action has moved lower. 111.60. Another support line which has been turned into a resistance line as it has been broken. And finally the 113.45. There's a clear downward movement. And I would be starting from here. Interesting to note that the price action is about to test also the upward trend line which was initiated since the 10th of February. 9th of February, sorry. No, 10th of February. So practically all this upward movement seems to be under threat. It's not the first time. You can see that the upward trend line was tested at the initiation here, 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 and it's being currently tested as well. So for the time being though, in the short term, we tend to maintain a bearish outlook as long as the price action remains below the downward trend line we have just drawn and was initiated yesterday. I would expect that though to come into the test on two reasons. One, the upward trend line has been met. B, we have a RSI indicator which has dropped below the reading of 30, which on the one hand tends to imply that a bearish sentiment is present in the market for the US dollar index. On the other hand though, may imply that a correction higher is possible as the index is at oversold levels. Now, should the bears maintain control and the bounce on the upward trend line practically fail, we would expect the price action to definitely break the 110 support line, the S1, and aim for the 109 support level. It's a distance which could be easily covered. You could see that it was covered at this candlestick, at this candlestick. This was even wider. Now, should the S2 also be broken, our next possible stop is a little bit to the extremes, I know. However, would be set at 107.40 as it had provided a clear support at the downward motion of the index around mid-September. Actually, the 12th if I'm correct. Now, should the pair stabilize, I would expect it to break the pre-mentioned downward trend line, yet at the same time respect the 110.70 and continue a motion between the 110.70 and the 110. For a bullish outlook, we would require a clear breaking of the downward trend line pre-mentioned, also breaking of the 110.70, which would be signaling that we're changing from a sideways movement towards a bullish outlook, and some confirmation, or if you prefer, some further signals could be sent for a bullish outlook should the price action of the US dollar index start aiming, if not even testing, the 111.60 resistance line. Once again, as long as the price action remains below the downward trend line initiated yesterday, we tend to maintain a bearish outlook. Let's have a look at Euro USD. Euro USD, which shows us a reversed picture. You can see the pair rising. However, it's not only the US dollar weakening at this point, but also the euro, which is strengthening. And it's characteristic that we have a more far-reaching upward trend line, which was initiated not yesterday, but on Friday, the 21st of the month. So euro is on the rise, US dollar is weakening, so euro USD rises. And it's characteristic how the price action has broken above parity level. It's for the first time, people, and we haven't seen that since the end of September, the 20th of September actually. It's a beautiful rise. Let's go hunting. Now let's correct first of all. Definitely all resistance lines which have been broken are to be turned into a support line given that the price action is now above it. That includes the 0.9875 and parallel level. First resistance line is being placed at 1.0090. The second, which I'm placing right now, would be at, in red please, let's have a look, 1.11, sorry, 1.011, my bad. 1.0, that would be 1.0195, just to catch the peak here. Let's move even higher. And we'll have to go a little bit further back here for that. This one. This peak here. The next one should be higher. It's a bit questionable, but we're talking about 4 months back. It's since the end of July 28th, right? Actually, it's since the 2nd of August. On the other hand, we have another peak right here, despite that being a little bit wider. I'm going to go with the wider one. Yeah, let's have a look at it. 1.0365 in red. Readjusting the chart. No, that's too wide, far off. I'm lowering this to this peak here. A nice reversal of a clear upward motion. In red, and that's the 1.0290. Readjusting the chart, widening a little bit. Let's readjust the labels as well. Final support line being placed for the time being. There's 3 at 0.9755. Second support line being placed at 0.9875. Third support line being placed at parallel level. First resistance line being placed at 1.0090. Second resistance line placed at 1.0195. And the final resistance line for the time being is being placed at 1.0290. So we tend to maintain a bullish outlook for Euro USD as long as the pair remains above the upward trend line initiated since Friday the 21st of the month. We would like to note though that there are 2 elements which set or may make more advances a little bit difficult. The first is the fact that the price action has broken above the upper Bollinger Band. And that tends to imply that the pair may have reached overbought levels, as the price action may have gotten a little bit ahead of itself. And maybe correcting lower, which we are seeing right now. At the same time, note there is an indicator below the 4-hour chart which has broken above the reading of 70. On the one hand, definitely confirming the dominance of the bulls. On the other hand, though, may also imply that Euro USD has reached overbought levels and may be ripe for a correction lower or even a stabilization. Once again, as long as the price action remains above the upward trend line, we maintain a bullish outlook. Now, should the bulls maintain control as expected, I wouldn't be surprised to see them breaking the 1.0090, excuse me, and start aiming for the 1.0195. Now, should the pair stabilize, I would expect it to remain between the 1.0090 and the parallel level. One sign which would be signaling the stabilization would be the breaking of the pre-mentioned upward trend line, yet at the same time, the price action respecting the pre-mentioned and the R1. Should the bears take over, I would expect a clear breaking to the downside of the parallel level. Definitely, I would require a clear breaking of the pre-mentioned upward trend line and the price action to start aiming of even testing the 0.9875. That would be prerequisite, as given we have a slight throw, a correction stabilization here. I would like to see the next throw being lower, nearer to the 0.9875. Okay, let's have a look at cable. In GBP USD, which is definitely also on the rise. Let's mark this. And we have to mention here that on a fundamental level, the pound's rise, especially yesterday, was partially due also to the announcement or appointment of Rishi Sunak as the new Prime Minister of the UK. I know the situation there is still a little bit liquid, but overall, I would dare to note that maybe better than what the situation was with Liz Truss, at least market-wise. Okay, let's make the necessary adjustments here. Definitely, the R1 is going to be switched into a support line and could rise a little bit higher to reach 1.14. Could go even higher, 1.15 maybe. Too high. Somewhere here. And that would be the 1.1425, as could also the first resistance line, which has been pushed a little bit higher here at 1.1615. Second resistance line still holds. I'm keeping that. And let's go hunting for another resistance line. This one. Somewhere here. At 1.19. In red. Okay. Let's see the support lines once again. I would be misplacing the first support line somewhere here. Second support line, sorry. At 1.50. Catching the throw here and here. And the peak here and here. And the final support line at this throw, which is a little bit wide, but still seems to be valid. And that would be at the 1.1055. Let's adjust a little bit the labels. Final resistance line being placed now at 1.19. Second resistance line being placed at 1.1745. Let me reconfirm this. Sorry, that would be 1.1740. First resistance line, which was tested during today's European session, would be placed at 1.1615. First support line being placed at 1.1425. Let's reaffirm this. Yep. Second support line being placed at 1.1250. And third support line being placed at 1.1055. So overall, we tend to maintain a bullish outlook for GBP USD, in which case I wouldn't be surprised to see it breaking the 1.1615. A slowdown could be expected. However, I wouldn't be surprised to see the pair reaching, if not even breaching, the 1.1740. On the other hand, should a stabilization occur, I would expect the price action as a first signal to break the pre-mentioned upward trend line, yet at the same time respect the R1 1.1615 and the S1 1.1425, while a bearish outlook could become evident should the price action A break the pre-mentioned upward trend line. Definitely would require clear breaking of the 1.1425 support line and the price action to reach or start actively aiming for the 1.1250 support level. Okay, let's have a look now at USD/JPY. Definitely the 147.70 has to be turned from a support line to a resistance line given that it has been broken. See how the US dollar is losing ground across the board. It's impressive. It's as if practically the strengthening of the USD is now being reversed. Now the final resistance line, I would be placing it somewhere here. In green, and that would be the 141.85. It's very, very evident of how the USD is losing ground even against the weaker JPY. Let's readjust. Also the labels, making a start with the R3, which is now being placed at 152.50. The R2, which is being placed now at 150. The R1, which used to be a support line, yet as it has been broken, is now considered to be a resistance line at 147.70. The first support line, which is being placed at 145.50. Oh la la, that's a mistake. Here we go. The second support line being placed at 143. 0.50. The final support line being placed at 141.35. Now, in my opinion, we may see, as long as USD continues to weaken, I would expect USD JPY to continue to weaken, to drop. And on the other hand, note that the RSI indicator is pretty low, reaching the reading of 30, bouncing on it, yet remains at low levels, so practically the bearish sentiment is still present. I wouldn't be surprised to see USD JPY dropping and maybe even testing breaching the 145.50, taking an aim for the 143.50. It's characteristic how interest rate differentials have affected this pair. It used to be on the rise for a wide period. It would be more evident if we drill out to the daily chart. See this rise here, this beautiful upward motion. And that began practically on the 3rd of March here, the 7th of March. And all of that seems about to be reversed. But for the time being, the bearish movement is definitely not wide enough to threaten it. But it's interesting the fact that as soon as the market has started to expect that the Fed is going to be easing its hawkish stance in December, USD JPY has started to weaken. Okay. Now, should, on the other hand, a stabilization occur, I would expect it to remain between the 147.70 and the 145.50, while a bullish outlook, should JPY continue to weaken further, we may see that playing out should the price action of USD JPY break the 147.70, the R1, and aim, if not even touch, the R250. Okay, let's move to the second safe haven currency pair, that would be USD-CHF. Okay, we see that the price action has dropped, broken the 0.9920, which was tested multiple times. It's a clear break. And definitely we have to correct this, turn it into a resistance line, and go hunting for a new resistance level. Somewhere here. The sideways motion, I want to catch the sideways motion here as a low boundary. And that would be the 0. Give me a sec. In green, the 0.9615. I know it's not symmetrical, but to tell you the truth, I don't care much. I just want to feel that it had found some support in the past, and I think the sideways movement proves the validity of the level, but it could be a little bit higher. Could be placed also, say for example, at 0.9620 or 25. Let me readjust also the labels to have a more clear and instant view. Making a start with the R3, which is now being placed at 1.0145. The second resistance line being placed at 1.0050. First resistance line being placed at 0.9920. First support line being placed at 0.9735. Second support line being placed at 0.9690. And final support line being placed at 0.9615. Now, as for the direction, we see that there is still a downward motion with the downward trend line guiding the pair since yesterday. Yep, it is since 25th. On the other hand, though, I would be noting that the price action has broken below the lower Bollinger Band, has hit the level of 30, so there may be some slowdown or even an extension of the correction high of the pair, which is currently being formed. Nevertheless, as long as the price action remains below the downward trend line, we tend to maintain our bearish outlook, in which case we may see the price action of USD/CHF dropping once again, aiming, if not breaking, the 0.9735 and start aiming for low grounds. On the other hand, should a stabilization occur, we may see the price action breaking the downward trend line, yet remaining below the 0.9920 resistance line, and to the downside, possibly respecting the 0.9735, albeit it may not be even reaching that low. For a bullish outlook, we would require a clear breaking of the downward trend line, signaling a trend reversal. I would also be requiring a clear breaking of the 0.9920 resistance line and the price action to start aiming, if not even touching, the 1.0050 resistance level. For the time being, once again, as long as the price action remains below the downward trend line, we remain bearish for USD/CHF. Let's have a look at AUD/USD, commodity currency pair, on the rise, clearly breaking the 0.6345, and definitely we may need to widen a little bit here. For starters though, the R1 has to be reversed into a support line. Let's go hunting for a new resistance line. I would be keeping my sights set on this peak here. And that would be the, in red, 0.6770. Widen this a little bit. Second resistance line being now placed at 0.6670. So we're talking about 100 pips distance. First resistance line being placed at 0.6530. First support line at 0.6345. Second support line at 0.6195. Yep, correction required here. And third support line being placed at 0.6110. As for the direction of the pair, I would expect it to maintain an upward motion as long as it remains above the upward trend line initiated yesterday, something like this. And as long as it remains above the upward trend line, and should it do so, I wouldn't be surprised to see the price action rising further, breaking the 0.6530 and start aiming for the R2 0.6670. On the other hand, though, the RSI indicator has jumped above the reading of 70, confirming the bull's dominance. On the other hand, though, maybe implying that it has reached overbought levels. Also note the fact that the price action was able to break the 100 moving average, the 200 moving average, and the upper Bollinger Band boundary, and that may slow down on a technical level and further advances for the bulls. Should the pair stabilize, I would expect it to remain below the 0.6530, which provided considerable resistance here and here and here. So it's a pretty valid level that was also tested here. On the other hand, I would require clear breaking of the upward trend line, which excuse me, would be signaling that the upward trend has changed. So I would expect the price action to remain below the 0.6530, break the upward trend line. Yet at the same time, I wouldn't be expecting it to drop below the 0.6345. On the contrary, should the bears take over, that's a scenario which requires practically a breaking of the upward trend line to signal the change of trend. Yet at the same time, or somewhat later, I would also require a clear breaking of the 0.6345 support line, and for the bears to guide AUD/USD lower towards the 0.6195 support level. Note how the level provided resistance here, here, aimed for here, so that's pretty valid as well. So that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another educational video. The word Goldilocks is a reference to the popular children's story Goldilocks and the Three Bears. The term is used in finance to describe an economy that is just right with steady growth and normal inflation. It is an ideal economy that is not too hot and not too cold. In other words, it is a Goldilocks economy. In this balanced and healthy economic system, there is full employment, economic stability, and steady growth. The economy is not expanding too much to push inflation too high, and not slowing down to enter into recession. A Goldilocks economy is also good for investing and trading. In a growing economy, companies also grow and generate positive earnings, resulting in their shares performing well. Goldilocks economies are temporary in nature because there are boom and bust cycles. While there may be disagreement among economists about what the exact characteristics of a Goldilocks economy are, the basic idea is that there is a balance between growth, employment, and inflation. The ideal conditions for a Goldilocks economy are low unemployment. Unemployment is measured with the unemployment rate, which reflects the number of people willing and able to work but unable to find gainful employment and who have sought work in the past 4 weeks. The Federal Reserve estimates a normal rate to fall between 5% and 6.7%. Another condition for a Goldilocks economy is asset price inflation, which refers to an increase in prices of shares, real estate, derivatives, bonds, and other assets. Low market interest rates and low inflation are also important, as well as a steady gross domestic product. The GDP is the most essential indicator for a Goldilocks economy as it measures the value of all services and goods produced in a country and reflects the health of an economy. For example, a negative GDP in 2 consecutive quarters indicates a recession. On the other hand, a sharp increase in GDP can push prices too high and result in high inflation. An example of the Goldilocks economy is the US economy of the middle to the late 90s, but also the US economy after the bursting of the dot-com bubble between 2004 and 2005. Thank you so much for...
Today, I will be teaching you guys on powerful chart patterns. All these patterns can be used for beginners, intermediate traders, but a lot of beginners actually use these intermediate chart patterns. So, before we start, let me introduce myself. My name is Chen Yongjing, and I am the trade analyst. Our company is the finalist for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, disclaimer as usual, all tradings involves risk. It is possible to lose all of your capital if you do not trade properly with proper risk management. Okay, the agenda, the topics for today, what are chart patterns? And I will be presenting the top 3 reversal chart patterns and the top 3 continuation chart patterns. And then after that, we will turn on TradingView and we will incorporate them into a strategy. Okay, let us begin. What are chart patterns? What is that? So as you guys know, chart pattern is a shape within a price that helps to suggest what prices might do next. They have some kind of distinct formations, some kind of shape, and they serve as a foundation for technical analysis. So a trader that trades using chart patterns needs to know exactly what they are looking at as well as what they are looking for. So technical analysts and chartists look for patterns in the charts in order to forecast the future direction of the price. So these patterns can range from very simple to complex. For simple, I'm sure you guys have seen. Maybe you guys have not heard about it. Hey, have you guys heard about the double top? Have you guys heard about the double top pattern or the double bottom pattern? We also have a more complex one, head and shoulders pattern. Head, this is the head, and this is the shoulder. Head and shoulders pattern. Okay, there are also bullish and bearish reversal chart patterns, and okay, let's move on. So presenting the top 3 reversal chart patterns, we have double top. Just now I showed you guys double bottom and head and shoulders. These are the most common form of chart patterns that a lot of traders use. I personally use these patterns too. When I first started trading, I start to know what is double top, double bottom, but I did not know how to enter them properly. So let me show you guys. Hey, we have a Hulk. Okay, let me clear this. Eraser, clear this out. Okay, let us continue. Okay, presenting the double top. The double top is a chart pattern where the price reaches a high twice and fails to break out higher during the second attempt. The pattern comprises 2 peaks of nearly the same height. So with this red line right here, you guys can see that top 1 and top 2 are of the same height. Okay, the line running through the top is the resistance line and should be nearly horizontal. the pattern should form an M shape and is considered a bearish reversal chart pattern. Okay, the new minor support level is called the neckline. Neckline is this line at the bottom. The pattern is confirmed. One price breaks through. You guys see the Hulk, where the Hulk is at. He jumps through, smashes right through the neckline, and the pattern is confirmed. So how do we enter this? So you can see top one is here, top two is here. So I'll draw this, and we have the neckline. With the neckline, and once price breaches through, which breaches here, you guys can either set a sell stop, or you guys can wait for price to retrace upwards and continue heading downwards. So a retracement entry should be somewhere up there for confirmation. Okay. Let me show you guys a double top charts, maybe a double top chart. Okay, never mind. I shall complete this presentation first before we get right into trading view. Okay, double bottom. Does it look the same as double top? Take a look. Double top, double bottom. Now the M, it's a reverse M, which is a W. So same thing. We have a bottom one and a bottom two where price fails to break through. A double bottom is a chart pattern where the price holds a low twice and fails to break lower during the second attempt and instead continues higher. The pattern is categorized by a distinct drop in price followed by a slight reversal or bounce. So it forms the W, and the double bottom reflects very strong levels of support. So this is the supports that we are talking about, and often indicates a strong change of trend. Double bottoms appear in a downtrend and reverse it to the upside as price breaks through the resistance line or the neckline. And this is considered a bullish reversal chart pattern since the price holds a low twice and eventually continues with a higher high. So look at this Superman, he's flying up, breaking through. So you can enter this type of trade. Okay, maybe I'll show it right here. So we have the line, we have the bottom one and the bottom two. So with the neckline in place, once price breaks through this area, you guys can set a buy stop for price to continue to your next take profit target. So you should have an area for take profit to the left side of the chart. Also, you guys can also look for a retracement entry for price to come lower, like here, and you guys can enter a buy limit. So for price to go up, come down, for this buy to occur, it is called a buy limit. Okay. So far, do you guys have any question? Michael, Helena, and Awa, do you guys have any questions? Do feel free to ask me in chat. I will try my best to answer you. Okay, let us continue. Moving on to the heads and shoulders pattern. The head and shoulders is a chart pattern described by 3 peaks. Peak 1, 3 peaks. The outside two are close in height. Close in height as in, take a look. It is, so you can roughly see what I mean by the head and the two shoulders at the side. It is a bearish reversal chart pattern that begins with an uptrend with 2 higher highs, 1 and 3, and 2 higher lows, 2 and 4. which form the left shoulder. Left shoulder. 0.5 makes a lower high, which is lower than 0.3. So this is lower. This 0.5 is lower than 0.3. 0.5 forms the right shoulder. So I can draw it out. So maybe this area, 1, 2, 3, 4, and 5. So you guys can actually draw the line. You can look, it's roughly the same height. We have that same line. And where can you guys enter? Maybe you guys can enter at the bottom with a sell stop somewhere here. And your stop loss all the way to the top to be safe. You do not want price to continue go up. If you set a stop loss somewhere here, price reverses back up, hits your stop loss and goes back down. You don't want that to happen. But also then if price hits up here, hits at this area, price might be invalidated. The pattern might not be accurate. Okay, moving on to the top 3 continuation chart patterns. So we have the falling wedge, the bullish rectangle, and the bullish pennant. Okay, let us continue. So what is the falling wedge? Well, the falling wedge is when price goes up, like in this chart, goes up and then it consolidates sideways in a downward trend. Consolidate sideways. So for entry, you want to wait for price to break above this area, break above the trend line, the top trend line, and with your entry there, your stop loss must be below the entire falling wedge. So your take profit, where do you know where to take profits? The take profit size should be at least the size of the chart pattern for wedges. Look at this. So it should be about the same size for the take profit. So let's take a look at over here for the falling wedge. Take a look. Price is starting to come through, or you can draw it this way also can. It's very, very subjective when you're drawing trend lines. So let's say you enter your trade right here, enter here, stop loss below, and you can see the height is roughly the same height as the take profit. So yeah, let's move on. Next, we have the bullish rectangle. Okay, for the bullish rectangle, price is, what is it doing? It's consolidating sideways, and with the resistance and support in place. So you want to wait for price to go up, close above, when then you take your entry to take profit. So for this take profits area, it's also the same. It has to be about the same height of the rectangle. So you can see right here. So maybe let's draw this area. You can see, let's say if I enter my trade right here. So I enter, price went above, I entered here. And with my stop loss in place, and this area should be about the same height for your take profit target. Okay, moving on to the last continuation pattern, the bullish pennant. So for bullish pennant, instead it's the opposite of the falling wedge. So for the falling wedge, we are consolidating. After price goes up, we are consolidating downwards. So for falling wedge, it was this downwards. But for bullish pennant, price is consolidating upwards. Okay, same thing. We wait for price to break out this area before we enter. And then same thing, the size is the same height for your take profits, with your stop loss under the bullish pennant. So I can draw a trend line, another trend line. So you can see price consolidating higher. And with these breakouts, I enter my trade right here, stop loss below, and with the same height for the take profit. Well, do you guys use any of these chart patterns in your trading? Do let me know in the chats. Do let me know whether you guys are using chart patterns. Okay, I will move on to trade. Okay, I'll end this presentation where I'll move on to trading view. Give me a moment. Okay, in case you guys are wondering, we have an IronFX TV too. You guys can visit IronFX Global, and you guys can not register, you guys can subscribe to IronFX. Let me open the chats. You guys can subscribe to IronFX for the latest updates on the markets. Wyckoff, so we have a webinar on Wyckoff, and we have a playlist. You guys can go through it when you guys are free. So let me turn on trading view. Let me turn on trading view. Okay, moving on to the charts. Let us get to the charts. Let us take a look at the euro dollar. Okay, let me change the chart layout. Give me a moment. Okay, shall I use these? Okay, shall I use these then? I think I should create a new layout. Never mind, new layout. Okay, I'll rename these to my name for webinar. Okay, let us begin. I'll close all this stuff. So maybe we can try to find a setup. I'll start with the euro dollar. Maybe you can get a setup of this. So on the 15 minutes, there isn't any. But there was a wedge though. There was this pattern price broke out. You could have entered with your stop loss at the bottom. And for conservative take profits, it should be the same heights. So this is 33 pips. So you should get it about 33 pips too. So it's roughly a 1 to 1.25 risk to reward. Let me get a drink first. Okay, continue. Let us continue. Okay, one of the most common ones I like to use is the head and shoulders, double top or double bottom. So maybe we can find a double bottom on the 15 minutes chart. 15 minutes chart. So do we have one here? Okay, we don't seem to have one, but we also have another chart pattern right here with price breaking out of the wedge. Same thing. We have a long right here, stop loss underneath, and the take profit should be roughly the same height. So this is 72 pips. So let us see if we got 72 pips off of this. So it's nearly there, but not there. It should be roughly. So we got to the max of 65 pips. Okay, let us find more patterns. Maybe a double top. I try to find one. Okay, we have a head and shoulders pattern. You guys see the head. So we have 1, 2, 3, 4, and 5. So can see the shoulders and the head right here. But for this trade, it didn't, the risk to reward isn't worth it. So let's say you set the sell stop with your stop loss at the top, or conservatively, maybe here. But the trade didn't even hit a 1-to-1. It's in a negative risk to reward ratio. So I do not recommend you guys to actually take trades that are in the negative risk to reward. Minimum 1-to-1. Do not take anything less than that. Why you should not take anything less than that? So would you rather, let's say it's a bet, you are betting $10 just to make $5. Is that trade worth it? You are betting $10 to make 5. Or would you rather bet 10 to make 10? Something must be fair, right? So let's look for the double bottom or double top. Okay, this is another head and shoulders pattern. Let me get the line out. Okay, we have the horizontal line. Let me turn it red. Horizontal line, and this is the shoulder. And we have the head right here. And our sell stop, we can set it right here. And also aim for a minimum 1-to-1, but for this case, price continued downwards. So let's see all the way it went. So 1 to 3. So roughly 1 to 3 to the next resistance line. Take a look right here. Price tapped nicely into the resistance or support. Should I call it support? 1 tap, 2 tap, 3 tap. So it confirms it is a valid support, and price immediately bounce right up. So take a trade, you guys can actually spend time planning. You do not have to trade every single day. So for me today, I have not seen a solid setup that I want to take. For me personally, last time I used to actually use all these kind of chart patterns. But to be very honest with you guys, it did not work that well for me. Maybe because I was impatient. I just wanted to enter trades, just wanted to make some money. And now I actually don't use chart patterns. I use something called smart money concepts. Have you guys heard about that? Smart money concepts. It's my main trading method. So I'll type it out into the chat. Have you guys heard about it? Smart money concepts. This is what I actually am using at the moment. Okay, moving on. Okay, moving on. Let us find more. I haven't found a double top or double bottom yet. It's quite hard to spot. Let me find it. Okay, this can be considered a double top also. Take a look. Okay, this got to draw a horizontal line. So price failed to break this area twice. Hey there, Michael. I see you sliding in. Hi, man. Nice to see you. How are you doing? So we have the top 1 and top 2. Next, you can actually set your sell stop at the bottom. but your stop loss must be quite high. I don't think this trade is worth it. I don't think it's okay. Actually hit a quite nice 1 to 1.81. So let's say we take a 1 to 1. Just right, we have another support right here, resting around here. So it's pretty much a okay, still in the negative. It's not worth it. Okay, this trade isn't worth it because it's a negative risk to reward, although it is a double top. So I'll clear this out. Okay, maybe we can start to find more trades. Okay, this can be considered a double bottom where price failed to break the low twice, bottom 1 and bottom 2, with the neckline right here. Price then shot up. You can actually set a sell stop, not sell stop, a buy stop. Okay, a buy stop right here, stop loss below, and aim for a 1-to-1 risk to reward. So yeah, it actually cleared pretty nice. So maybe you can aim for maybe a block right here. I'm not sure how you guys trade. Do let me know how you guys trade in the chats, so we can have something to discuss on. So I can discuss on your trading methods. Maybe I can give some insights. So maybe we have some kind of area here. Price actually tapped into that. So if you aim for it to hit there, it would have been a 1 to 1.62 risk to reward. Okay, let me continue finding more setups. Let me find. It's a bit hard, man. Okay. Okay, maybe I'll just get it out on the hour. Maybe I can see the bigger picture. Okay, so we have price heading there, heading there. Okay, this is possibly an example of a failed double, of a failed heads and shoulders. So this kind of situation actually happened to me back then. So I would potentially see this as the, where's that brush? Okay, so this might be the shoulder, head, and shoulder. So if I were to sell right here, you would have seen my full stop loss would have been hit. Price just came down to clear only. Just take a look. Price came down, and this is an example of a failed head and shoulders. Okay. I'm looking for a double top. A double top would be nice, would be very nice. Okay, maybe on another currency, maybe USD JPY. Oh, it's very messy. The Bank of Japan intervention. Too messy, too messy. USD CHF. Maybe we can find something here. Double top. I'm still looking for a double top. If you guys have one, okay, I just found it. Okay, this is a very, very obvious letter M. Very, very clear. So you can set a sell stop right here and your stop loss at the top. So at least you get a, I'm trying to push it, man, trying to get a 1-to-1, but damn, it's very difficult. Okay, so maybe I adjusted it. Okay, it's still a negative. It's not that good, man. Okay, it's not that good. It's in a negative risk to reward. Although that is a very, very clear. Oh, we also have the double bottom immediately after the double top was formed. So same thing, we have the bottom 1, bottom 2, where price failed to break lower. And then you can set your buy stop at the neckline with your stop loss below and your take profits upwards. Okay, it still is a negative risk to reward. That trade is not worth it. Okay, finally we have found a double bottom, a very, very clear one. Okay, let's clear this up. Let me find more. Okay, this can be considered a double top too. It's not that clear. I do not really like it, but can be considered as one. We have the clear letter M. So with that in place, I can show you guys where price failed to break twice. So that's the top 1 and the top 2. And then we have the neckline, where price goes down and then continues downwards. So let's say I took a pretty conservative price hits. Okay, this trade is not bad. Price eventually hits 1 to 1.56, but I will have closed at a 1-to-1 trade. 1-to-1. So sometimes you guys want to wait for a retracement. So how do you guys do that? A retracement sell entry. So maybe right here, some people actually use some kind of blocks. So they draw out some blocks. They say price can reverse back up. So I'll take my sell here, have a very, very nice sell. So for those type of people, I'll draw out for them. So maybe I look, okay, nice. This area got hits. Oh, what did I tap? What did I click? Okay. So price went up and tapped into their point of interest. It tapped nicely and short. This would have helped them to increase their risk to reward ratio, eventually hit a 1-to-2. By an issue about waiting for price to retrace, you might actually miss the entire trade. Price might just continue smashing down like the Hulk, like I showed in the PowerPoints. Let me continue. Possible. Okay, this is another double top. I'll clear everything out. So we are looking at USD CHF. This happened on July 12, 2022. So price again failed to break to the upside twice. We have top 1 and top 2. And then we also have the neckline. So same thing, you can actually set a sell stop right here and stop loss at the top and aim for a 1-to-1 risk to reward. Let's see how long it took. So it took a good 4 days. It's pretty long. So as it's okay because we are on the 1-hour chart. So let's take a look also. Same thing. Some people want to find the retracements. They want a solid entry. So maybe we can set this area. Price goes up, taps into that block right there, stop loss to the top, and their risk to they can get a 1-to-1 earlier on. So it actually took, instead of 4 days, they took 1 day and 1 hour for a 1-to-1 risk to reward. You can see it here. It says 1 day, 1 hour. So yeah, it's pretty nice. Let me find more setups for you guys. Maybe some setups in the making. Is there anything? Is there anything? Okay, I'll go currency by currency. I'll try to find something that you guys might want to take a look at. Again, this is not a signal service. I'm just showing you guys how you guys might want to take a trade. Okay, there isn't anything right here. Just nothing clean. There's really not a clean setup. Okay, just maybe this is not that clean. Okay, it's not, I wouldn't call it that. We find GG. GU. Okay, a rising wedge. Maybe this pattern. Maybe you guys can take a look at this. Okay, we are currently looking at GBP and ZD. So price is on the rising wedge. So potentially, if price closes above body price of the candle, I'm talking about the body. Price closes above, you guys set a nice stop loss at the bottom, 1-to-1, 1-to-1, maybe 1-to-1. So let's take a look. We want confluence. So maybe this price can hit upwards, just maybe hit upwards. But let's look to the left of our 1-to-1. Is there anything there? Maybe we have. So on the 1 hour charts, 4 hour charts, let's take a look on the 4 hours. Yes, 4 hours, you guys can draw a box of points of interest that you guys might want to take a look at for take profits. So this is on the 4 hour charts. Let me go back down to the 1 hour charts. Okay, we have something there. But daily, nah. Maybe 30 minutes. Okay, 1 hour, we just stick to 1 hour. Okay, to add more confluence for take profits, maybe you guys might want to implement Fibonacci. So you guys can use Fibonacci, retracements. Hey there, Martin. I just saw you. You just came in. Nice to see you there. Okay, so we can actually draw it out. A Fibonacci line, so can see where price might potentially react to using a Fibonacci. Hey, no problem. There's no sorry, man. All's good, all's good. Glad to have you on board. So I was just presenting to the chat on the rising wedge where we might potentially see price head towards. So we might potentially see price head towards these points of interest on the GBP and ZD. So maybe if I set to the 78.6% Fibonacci line, not sure you guys can see clearly, it says 78.6% right there. But even if I set it there, the risk to reward is quite bad. It's like 0.69 risk to reward. But yeah, it's something to look out for. Maybe you guys can, on a smaller time frame, maybe can reduce your risk to reward somehow, or here, maybe just below the 38.2%. So at least you guys have a 1-to-1 risk to reward. Okay, let us get more confluence. What we want is confluence. What is confluence for? It gives you the confidence to enter a trade, confidence for your take profit area. So I cannot just rely on the 78.6%. So we already have the H4 point of interest, the candle there, the previous high, 78.6%. Maybe I can draw another Fibonacci X, what do you call this? Expansion line. Okay, there's nothing good there. So what I'm doing now is I'm just finding confluence to that area where the price can go there. So we have a 161.8% there. Adding confluence to that area for a potential take profits around here. Let me draw another one out. So maybe I'll draw a Fibonacci projection line. So we have it here. It's called the trend-based Fib extension. So I can draw it from the bottom up, bottom, top, and there. There, nice. Look, we have the 100% Fibonacci projection line. So this is adding confluence to that area for potential take profits. So I've already drawn 3 different Fibonacci lines that are nearly intersecting, very, very close to that area, along with the 4 hours points of interest. So this might be a trade that you guys want to take a look at, GBP and ZD. Okay. Move on to Euro GBP. Maybe there is something. Let me find some kind of chart pattern. There isn't anything clean. Taking a look. There isn't much. Euro JPY, nah. So messy. Aussie CAD, there isn't anything. Aussie CHF. Okay, there isn't anything. AUD, NZD. NZD CAD, NZD CHF. Okay, this would have actually been maybe potentially a nice head and shoulders pattern. It might have, but then price went up to invalidate. So I would have seen this as the shoulder, the head, and the shoulder, but price went back up to test again. So we cannot have like 3 shoulders. So I would invalidate this pattern. NZD JPY, there isn't anything. CAD CHF, CAD JPY, okay, there's nothing. Euro NZD, okay, maybe NZD CAD. 30 minutes charts. There isn't. There don't seem to be anything there. Okay, maybe we can check out Bitcoin. Maybe you can use this on Bitcoin. Okay, there's nothing really, man. It's all messy. Or too much movements. Okay, I'll just get to the smaller time frame then. 15 minutes. Maybe we can see something. I'm just searching around for any chart patterns. So just now I already gave you guys can't remember, what did I show you guys just now? Ah, yes, GBP, NZD. Okay, let me find other trades. GBP, 15 minutes. I'm just scrolling around fast, just trying to find a pattern. Just searching and searching, man. Maybe this not clear. I'm looking at, maybe it might be a double bottom. There isn't anything that's clear yet. Five minutes. Is there any 5 minutes? 5 minutes. Okay, this might be a potential double top potential on Euro CAD. Possible, just possible. Price failed to break to the upside twice. Rejection. Top bottom, top 1, top 2, and we have the neckline. Let's take a look live. Maybe we can see price continue heading downwards. Just maybe somewhere. Just take a look. This is not a signal. Please don't anyhow enter trades. Please don't. We have the disclaimer at the start of this presentation. Okay, let's take a look. 15 minutes. Maybe we might have something, a points of interest, maybe on the hourly. So hourly, maybe we have these points of interest right here. Just maybe here. Maybe price might potentially continue heading downwards to that area. So EuroCAD, there's a potential double top that we are looking at on the 5 minutes chart. Okay, Euro CHF, let me see. Euro JPY, okay, it's too messy, man. It's like in a messy consolidation. Aussie CAD, there isn't, okay, maybe Aussie CAD. 5 minutes. So we have this wedge. Let me take a look. Let me draw it out. So we have this area right here where price is. What is it doing? Higher highs, higher lows. So potentially, just potentially, we might see a long movement with the size. The take profits must be the same height, roughly, just an estimate. Same height. So let me measure this out. It's a good 21 pips. So you can see here, maybe 21 pips. 21. Okay, just right. 21 pips. So this is a 1 to 1.21 risk to reward. This is on the Aussie CAD. Upon a potential trade setup that we might see. Okay, I'll take a look at EuroCAD. I'll come back to this later. EuroCAD and Aussie CAD. AUD CHF, there's nothing on the 5 minutes. I'm looking at 5 minutes because most of us are day traders. Maybe you guys are looking at 5 minutes. I do not know. AUD NZD. No clear patterns. I'm trying to find one. CAD CHF, nah. Maybe this might have potential. It's not that clear, but it might have potential. So we are looking at CAD JPY. But please try not to touch JPY pairs. It's very, very volatile recently due to the multiple interventions from the Bank of Japan, and they had done stealth interventions too. So this might be the neckline, and this might be the W that we are looking for. It might be, it might not be. So we can draw it nicely. Price failed to break twice. So this might be a double bottom scenario. The double bottom chart that we might be looking at. Hey guys, are you guys looking at any currencies right now, or are you guys in any trade? Do let me know. Any trade you guys are in right now. Whether you are buying, you are selling, just share it. It's fine. It's an open chat. I personally have not entered any trade today. I've been very, very busy. I was busy preparing, doing other stuff, working. Haven't had a proper chance to look at the charts today. So NZD, okay, there isn't any trade. I'll restart. GU. Oh, we might have a potential head and shoulders pattern. So we have the shoulder, and the head. So we might see a short entry right now at this area towards maybe the next point of interest right here. Maybe here. With just a retracement. So price already broke the neckline, head and shoulders. So that's where I'm looking at for the area. So just maybe in GU, we might have a head and shoulders pattern. So this is a nice 1 to 1.45 risk to reward. Let's go on to Aussie CAD. Is there anything? Nah, there isn't anything. Euro USD. Oh, it's actually showing the same pattern. Okay, it's roughly okay. It's not. I thought it was a head and shoulders, but the shoulders are not of equal heights. USD CHF, Aussie dollar, nah. GA, GCAD. There isn't any solid setups. So I spotted quite a few already. You guys might want to take a look at those on your trading view charts. Okay, EuroCAD, it's reversing. It hasn't broken. It has not broken the neckline. UCHF, nah. Okay, it hasn't broke. It's still consolidating within the wedge. And NZD CAD. Now we don't have much. Don't have much nice setups for today. Okay, price actually did close. I would count this as it didn't really close underneath. So if you are taking this trade, it might be quite dangerous. Okay, just watching out for that. Okay, tonight we have quite a few news coming up today. So at 10 p.m. tonight, we have the CAD news. So if you guys are trading the Canadian pairs, do take note. Try not to trade now till after 10 p.m. My time is 10 p.m. or 10 a.m. New York time. So you can change the timing. What is the next trade? What's the next timing? What is New York time? +4. Where is New York? Where is it? I forget it. Cannot find it. It's fine. Never mind. Let's take it as it's in 10 p.m. So time now, USA. New York. I'll just take it time now, USA. Okay, it's 6:53 a.m. The news should come out at 10 a.m. United States time. GMT -4 is the New York time. Okay. If you guys have any more questions, do you guys have any more questions regarding chart patterns, or you guys are using any chart patterns? Feel free to ask me in chat. I'll give you guys some time. Do let me know if you guys have any more questions. Okay, if not, let me show you guys my trading view. So actually, I did some forecasts. Maybe you guys might want to follow me. Okay, this is getting a bit exciting. I'll show you. So we can find my trading view account here at Doge Stonks. So people, Doge Stonks, that is me. You guys can see that's my face. So maybe you guys want to follow, you guys can follow me in the description, in the link that I've sent in the chat. So, okay, I have quite a little followers here. It's fine, 80 followers, that's me. Well, I was forecasting euro dollar to go up on October 22nd. So when was October 22nd? It happened on the Saturday. So on Saturday, I actually drew using smart money concepts. I forecasted that price might hit the point of interest, go back down to the market's imbalance fair value gap before price will continue moving upwards. Let's take a look. This was forecasted last Saturday during the weekend. So I press start. Wow. Take a look. it has nearly hit my take profits. This was forecasted, as I mentioned, on October 22nd. I wrote Euro USD potential forecast. So you guys can follow me. If I'm free, I will post on the weekends for potential ideas. So you can see price actually tapped into the fair value gap, market imbalance area, dump, and wow, continue going up to my final take profits. It nearly hit my take profits already. So gold, I also forecasted something. I was forecasting gold to come down into the 1642 area. 1642 area before price might potentially go up. So let's take a look. I haven't taken a look at gold yet. So I start. Oh, take a look. Price tapped in and it's now on the way up to the take profits area. And again, I mentioned this was forecasted on October 22nd. I even gave my reasons on why I felt that price could bounce off this area upwards. So you guys can follow me. I will be posting pretty constantly more in the future. So we have a few comments. Well, okay. Okay, this is pretty much my account. So if you guys want to follow, feel free to follow me. So we have I have nice 2 forecast that is about to take profit already. I actually only search for the best setups before I post them. I don't anyhow post. I don't purposely try to force. Let's see who has followed. Yeah, I cannot see this, not my account. But thank you very much for following. If it's you guys, it jumped to 82. Okay, yeah. That's about it. I thank you very much for joining me today for this webinar. I hope you guys learned a lot about the chart patterns. Or if you guys want to know more, you can learn more about Wyckoff. I implement Wyckoff in my personal trading. It might be a little technical, complicated, but I'm sure through this, you guys can understand it better. Anyway, thank you very much for joining me today. My name is Chen Yongjing, and thank you very much. Just follow me. Appreciate it. Hey, bye guys. Thank you very much for joining.
Hello, my name is Christina and welcome to another educational video. The terms mine and yours were used by traders on the trading floor to signal buying and selling of securities. The term mine was a buy reference while yours was a sign that an individual wants to sell an order. These terms were used with other similar terminology in the open outcry system. This system refers to the trading pits before 2010, where traders used verbal communication along with hand signals to convey trading information. In these marketplaces, large group of dealers and brokers engaged in competitive buying and selling. The words mine and yours were used to express the intention to buy or sell, respectively. Both buy and sell were also common. For instance, a dealer in the interbank market might type or speak mine to a counterparty of broker if they wish to purchase a specific currency. The trader will say yours, signifying it's yours if they were to decide to sell. In the same way, if a floor broker offered 100 call option as $1 each and a market maker decide to purchase them, they could respond by shouting mine to indicate their intention to do so. Both of these words were used to enable quick and precise transactions in a market that was frequently chaotic and active. Today, the words mine and yours are both still frequently used, mostly in the Forex market. Additionally, they continue to be employed in the same context as they did under the open outcry system. Thank you for watching.